Companies are like small businesses, just much bigger. They need money to grow and thrive. Think of a local bakery wanting to open a new shop. They need money for ovens, ingredients, and to hire bakers. Where does this money come from? One way is by issuing stocks. A stock is like a tiny piece of ownership in the company. When people buy stock, they are giving the company money in exchange for a share of ownership. Companies use this money to expand their operations, develop new products, or pay off debts. By issuing stock, they can raise large amounts of capital without taking on loans. When the company profits, those profits can be shared with the stockholders, the people who own the stock. This is one of the ways owning stock can be rewarding. Imagine owning a piece of your favorite bakery. That's what owning stock is like, but on a larger scale. When you buy a share of stock, you're buying a small ownership stake in a publicly traded company. Stocks are important because they represent a claim on a company's assets and earnings. As a shareholder, you have the potential to profit from the company's success. There are two main ways to make money from stocks: dividends and capital appreciation. Dividends are like bonuses paid out to shareholders from the company's profits. Capital appreciation is when the stock price goes up and you sell it for more than you paid. Stocks are considered an essential part of a diversified investment portfolio. They offer the potential for growth that can outpace inflation, helping you build wealth over the long term. Not all stocks are created equal. They come in different flavors based on various factors. Understanding these differences can help you make informed investment choices. One way to categorize stocks is by market capitalization, often called market cap. This refers to the total value of all outstanding shares of a company's stock. Large cap stocks represent well-established giant companies. Small cap stocks are from smaller, often younger companies with higher growth potential but also higher risk. Stocks can also be classified by ownership structure. Common stock gives you voting rights in company decisions. Preferred stock typically doesn't come with voting rights but offers a fixed dividend payment. Another way to group stocks is by their underlying fundamentals. Value stocks are considered undervalued by the market, trading at a lower price than they're worth. Growth stocks are expected to grow at an above-average rate. Section 4. Share market versus stock market. Is there a difference? The terms share market and stock market are often used interchangeably and for good reason. They essentially refer to the same thing. Both involve the buying and selling of securities, which are financial instruments representing ownership in a company. Think of it this way. Stock refers to the actual ownership units of a company, while shares represent the individual units that make up the stock. So when you buy 100 shares of Apple stock, you are buying 100 units of ownership in Apple Inc. The stock market or share market provides a platform for companies to raise capital and for investors to buy and sell ownership in those companies. Exchanges like the New York Stock Exchange or NYSE and the NASDAQ are where these transactions take place. Whether you call it the stock market or the share market, the underlying concept remains the same. It's a marketplace for companies and investors to connect and participate in the growth of the global economy. Section 5, the mechanics of trading, how buying and selling works. So how do you actually buy and sell stocks? The process is simpler than you might think, thanks to the advent of online brokerage accounts. First, you open a brokerage account with a reputable firm. This is like opening a bank account, but specifically for trading stocks. Once your account is funded, you can start buying and selling. You can place orders through your broker's online platform or by contacting a broker directly. A market order is an instruction to buy or sell at the best available price. A limit order specifies the price you're willing to buy or sell at. When you buy a stock, you are buying it from another investor who is selling. The price is determined by supply and demand. The more people want to buy a stock, the higher the price will go. Conversely, if more people are selling, the price will drop. Section 6. Speaking the language, key stock market terms explained. Like any specialized field, the stock market has its own unique language. Understanding some key terms is essential for navigating this world. Sensex. In India, the Sensex is a stock market index that tracks the performance of 30 large-cap companies listed on the Bombay Stock Exchange, or BSE. It's like a benchmark for the Indian stock market. SEBI. The Securities and Exchange Board of India, or SEBI, is the regulatory body that oversees the Indian stock market. It's like the referee, ensuring fair play and protecting investors. A Demat account is an electronic account that holds your shares in electronic form. It's similar to a bank account, but instead of holding money, it holds your securities. A dividend is a portion of a company's profits that is paid out to shareholders. It's like a bonus for owning stock in a profitable company. Capital gain. Capital gain is the profit you make when you sell a stock for a higher price than you bought it for. It's the difference between your selling price and your purchase price. Section 7. The long view stocks for a secure financial future. The stock market can seem intimidating at first, but it's a powerful tool for building long-term wealth. While it's not without risks, investing in stocks has historically provided higher returns than other asset classes like bonds or savings accounts. The key to success in the stock market is to adopt a long-term perspective. Don't get caught up in short-term fluctuations or try to time the market. Instead, focus on investing in quality companies with strong fundamentals and holding those investments for the long haul. Remember, knowledge is power. The more you learn about the stock market, the better equipped you'll be to make informed investment decisions. There are countless resources available, including books, websites, and online courses that can help you expand your understanding and embark on your investment journey with confidence.